Hi, everybody. This is Bitcoin Live with the Power Law team and the Minotaur team. Um, this is a show where we look at Bitcoin price action using different tools, in particular, looking at the global liquidity, local liquidity. We look at different, sorry for that, guys. Somebody's loud engine. Um, and we also using the Power Law indicators. If you're interested in getting these indicators, there is a link on the screen. You can join my Bitcoin community, my Bitcoin Power Law community. And also, we have like a Discord channel. You get different indicators. And one of them is what I'm going to share right now. We call it the bimodal, the Power Law Bitcoin model. The idea is that, we can look at Bitcoin like if it was made of two regimes. It is a regime where we are below the Power Law, that is the blue line, and we call this the core Power Law regime. And basically that means the true Power Law during this regime is this green dark line. And we tend to oscillate around this green dark line. Sometimes we go very far away, but in this case means going to the support line. So there is this support line, we have mentioned it many times, is about 60% away from the Power Law. It can be derived in another way. I have mentioned that it's something that Bitcoin seems never to cross. Now, in the last few days, I did some simulation using the statistics of Bitcoin. And sometime in this simulation, you get paths that are below the trend line, the support line. But that it seems that there is something else. There is something that, when you study these things, you're trying to make sense of what is going on, right? One of the things that I'm trying to make sense is why we never cross it, right? Even if statistically it's possible. So probably there are some fundamental principles due to the cost of mining, and this. So it's an additional regularity in Bitcoin that is difficult to simulate, but it's pretty good. It's a very powerful thing, and it's kind of a basis of what we use as a tool for our trading system. Anyway, this tool, this indicator has been very useful in the past because you could tell when we were in these turbulent regions that are associated with bubbles. We spend 1 year going up, 1 year going down. But usually, once we cross this line, right, when it's more sophisticated how the indicator finds these regions. It uses something that is called Markov chains. Basically, identify different probability states. And it says, oh, I see. You can say how many identify in the data 2 states, 3 states. In fact, we could add one more state that is a state of transition. Maybe that actually is useful because maybe these recent behavior can be understood as a transition. We are in this transition and we are not going in one place or the other, right? So, but we are in this, so there is this transition area going from one mode to the other mode. And usually we stayed there and we never went down. Now, there have been few occasions in the core Power Law where we went up and it was very temporary and we went back, but never the other way around, where once we are in the turbulent region, we stay there for 2 years and then we go back. But this particular, this cycle, this bubble started like a usual bubble here, basically. And I even called it, I say, okay, great. The beginning of a bull run is now. We are, we are having a normal bull run, like always. It starts in November. Then we had this weird thing where we went back to it, and this never happened before. So actually, sorry, here. So here, this was November of it last year. We started the bull run correctly. We entered in this turbulent region. we were supposed to go a little bit faster, but it was time, and then there was this correction here, and it brought us back to this green region, and this never happened in the past. And then we went back again. Okay, maybe thought, okay, maybe we had this anomaly. We will continue to go up, right? We talk about this goal of 200K that we derive from past behavior, but something is happening, something is different where Bitcoin seems to love a power law. It wants to go back to it every time we leave it. Say, I don't feel like I want to go back to the power law. And we are doing this in both directions. So recently we went back actually to the green area again with the most recent correction. And now we are back, I'll say kind of almost crossing back to the turbulent flow. So this is what seems to happen over and over again. And there is so much to say. Many people are asking me, are we going to a 200K? Are we going to 100K? We don't know. We could. It's becoming more and more difficult. It's not out of the question. Bitcoin has done crazier things before. But right now, I did a recent calculation that we will need something close to 0.6% a day, every single day, in average, right? So that means someday even better than that, to reach this goal of 200K. Just to give you an example, last bubble, during this, these were much milder peaks than what we had in the past, right? Here. But so deviations like 5, for example. We get a lot of the ground noise. Let me just a second. Let me. Okay, so in the past we had like a 5-pair deviations from the trend, or even 10-pair deviations from the trend, and this time doing including a possible decay. We are talking about 80%, but it seems that we are not even able to do that, right? And last time, like I say, where we went 5 times above the power law, the average return during this period, let's say from when the bull run started to the second peak, was about 0.45%, 45. And so it's going to be required a behavior that is even faster of what we had last cycle, that is 0.6. So it's not completely out of the question. If we were talking about 2% a day, 3% a day, yes, it will be. But as we come closer and closer to the peak, we will require higher and higher gains. And while right now it's difficult, but not impossible, it's going to be more and more close to impossible, right? So, but by power law alone, we should be much higher than now, because by power law alone, if you continue to follow the power law, we will be something close to 130. So, it's still pretty good gains just by following the power law. The question is, are we going to see some kind of a proper bull market where we go crazy and then maybe we have a correction? That is the big question that all of us are trying to figure out. Anyway, this kind of covers most of what I have to say using the TradingView indicators, and I will leave the floor to Marcos that will look at the liquidity.
All right. Good information, Gio. So let's see what we got here. Where's my fried chicken? Let's see how let's see how that let's see how our little liquidity garden has been shaping up here. All right, first things first. Let's put our thinking caps on. Let's adjust our wigs and uh, let's calm down, take a deep breath, and let's look at what can allow us to sleep good at night right now. Um, Once again, at a very high level, we are looking at this is the perpetual contracts on Bybit. Binance is basically the same information And we're looking at the daily time frame so we can get a big picture. We've been in a consolidation pattern since about the beginning of the year. We started forming some liquidity right here, and that's when we got into this range here that we're in, and we've been in it for a long time. Uh, let's just get an idea how long we've been in here. Yeah, we're going on about 250 days, and we'll probably be here for another 30 or so. So that's a long time. Um, so what? Here's what we can sleep good at night. We know that it's pretty. I like to keep things incredibly simple. I'm going to show you guys here in about 5-10 minutes an incredibly complex, simplified diagram that you're going to get a kick out of. So basically, it's a simple process. Liquidity price action creates liquidity, then liquidity, like a magnet, attracts the price action, right? So we get a new trading program right here, and the liquidity starts to form on all three levels. This is 10, 25, 5, and 3. This is 10 and 25, 5, and 3. So as that liquidity begins to accumulate, the market makers collectively and institutions, they take positions on the long side. These are forced, these positions are forced to sell their leveraged positions at a discount. There's like a fair value channel running in here right here. So they are selling below, they're selling wholesale, forced to sell, and you have a large party of trapped unwilling buyers at retail prices. So you buy low wholesale and you sell above fair market value at higher prices. So that's where we're going. So here's what makes me sleep good at night. We're in the process right here. We flipped and we moved from this side of the equation, from accumulating inventory to selling off that inventory. So we had a major impulse here, displacement here. That was on May. We had a second major displacement on July. That's the second impulse, and we have not finished. So you won't see me get nervous until we go this direction. So you can't go in two directions at the same time. So there's more uh, inventory, or more buyers of that inventory that are already in position up here. The fried chicken analogy that I use right here, this area here. So we're not done. So until that happens, you're not going to see me change my stance. It's very clear. We can see right here, these are new return pockets of liquidity for when the market finally comes back down. This will be harvested later. It's not ready yet. There's gaps here. It's not dense enough to be attractive, at least currently. Anything can happen, but in the current time. So as we can see right here, since last week and this week, the market, that's why we don't watch the news for investment decisions. We can see right here that the market was incredibly fearful right in this area right here. Everybody on social media was saying, hey, it's the end. And I was sleeping like a baby because I realized that this area had not been tapped. Now, if I can, I'll show you here. We'll zoom in just a little bit here. You can see that it's just taking internal liquidity. That's all they're doing right now, is just sweeping up some internal liquidity, sweeping the floor before we get back on track. All right, so let me show you. Let's take a little look at our organic liquidity garden here and see how it's been growing. So last week we said that we were looking at this 155 level. That's still there, but we have a gap here. And as liquidity, it needs a fuel. It needs fuel to move. The price cannot move without fuel. So let's check and see how this gap is filling in. So we're going to back out. Let's just look at the 3X first. And we can see quite nicely that this is beginning to thicken and fill up really nice. Let's take a look at the 5X positions filling in really nicely. So when we put it all back together, we can see that we are putting in the composite density that we need to feel a big move. Think of it like a jack in the box. You just coil it and coil it and coil it, then you break. Um, so we are looking pretty good here. So what do I anticipate next? As I promised you, I'm going to show you something really, really complicated diagram here. The market, first of all, it likes the number three. We have a three, 1, 2, 3, 1, 2, 3, right? So we're setting up for that. I'm very confident because I'm seeing that the market makers are showing their hand by not addressing this liquidity here. So as we begin to move away from it, this liquidity will continue to be untapped. And that's what that gives me the confirmation I'm looking for. Now for that diagram. Okay, here we go. We have a point of control here. We have a level here. We have another level here. And we have a level here. So that's a pretty complex diagram, right? So we have displacement here, accumulation here, displacement here, accumulation here, displacement here. All right, you guys got that? That's as complex as I can make it, people. There's your 1, 2, 3, and here we go. So get ready. That's tic-tac-toe simple. So go forth and relax, and we can see that same pattern here. It's the same pattern over and over again. Displacement, accumulation, displacement, accumulation, displacement.
I like the fact that we created a kind of a new support level, right?
Oh yeah,
Relatively to
yeah, right
what we
here.
had in up to
Yep,
July. Yeah.
yep. So that's it. So we're looking at tap one. We hit it again here. And now, if you think about it, we said this in the earlier conversations that this is enormous. This is tens of billions of dollars of liquidity there. And these are forced buyers. So just from a simple mathematical concept, that would throw anybody's portfolio off. You have to acquire additional inventory and you need pricing momentum to be able to address that serious composition of density of orders. So the market is very notorious about showing you this direction to come back and hit you really hard that direction. So
Yeah.
just get ready for that move. All
I'm
right.
ready.
All
I
right.
want to
I'm
see
ready.
it.
And get your boarding passes.
I my algo bought a bunch of things. I'm
Yeah.
waiting for. I think my next level is 120 or something like that. My take profit.
Yeah, yeah,
Yeah.
yeah. We got
So I'm
take
waiting.
profits in here, and
It
Costa's going
should
to
it
show you
should be
that.
it should be relatively simple, right? To
Yeah,
get
all
there.
through here. We got orders in there. All
Yeah.
right, Cos, let them have it, man.
Nice, guys. Thank you. All right. I think you might have to unmute me. Am I unmuted?
Yes, you are.
Cool. So, as you guys all know, Marcus is our chief strategist. So, one of the things that he brought to our table, obviously, Giovanni brought the power law support in particular. But what Marcus brought to the team is our ability to trade the market just like the market makers move. That was one of the key insights that he brought and has helped develop for us. And as you can see here, we're perfectly following the structure of those moves. Another thing that we don't do is, we're not a trading system that takes millions and thousands of trades every single day. See here how strategic it is. This particular trade is looking really nice at the moment. We've got at the moment 1, 2, 3, 4 safety orders that have bought really great local bottoms, which has averaged down this price. It's given us an entry of 118, a take profit of 116, and a break even of 114. So another interesting point is that we're able to actually generate returns from the price going down. What's counterintuitive is we actually make more returns when the market goes down. Why? Because just like the market makers are doing, they're building inventory, so are we. And we're building that inventory here in these positions, as you can see. The first base order in this one took profit right away, whereas this one here, the market went against us. So we're now entering with these safety orders. And just like the market makers, we're preparing to take that move up, take profit here. What's especially unique about our strategy, though, is that we're also able to dive all the way down to power law support. Power law support. So that's what's really cool. is that we're either going to take profit, or if the market goes against us, we're going to be able to deviate all the way to the bottom of the power law support to a statistically defined range. So if you can get your head around that, you should be able to get your head around why this is such a robust strategy. It's also quite, Giovanni always talks about this. This isn't rocket science. It's just executed particularly well. And one of the reasons why we work so closely with all our clients when they join our program is that we need to engineer this for you based on your account size, based on your equity size, based on certain other parameters that we need to infer from having conversations with you. And that's why this isn't a trading bot, it's a trading system. But it does make times like this quite fun. As you can see, we're operating just like the market makers. We're accumulating positions, we're collecting that inventory, and we're waiting to fry that chicken as well. So everything's looking good on our end as well. Don't need to add any more than that.
Very, very good. So what is the best way for people to actually get involved with the system, Costa?
Yeah, the best thing to do is just book a call through the URL that's scrolling at the bottom. Giovanni posted quite a fair bit as well on his page. We do one-on-one consultations. They're actually free demonstrations. We'll go over the system and if it can fit with what your goals are. But yeah, we do these free live calls. You speak to either Matt or Josh, who are our specialists, and they'll spend a lot of time to see if you're a good fit for the program. So yeah, pretty easy to do. Just go and book the call.
Yeah, you can always DM me too, because I had actually very nice conversation recently with people having a bunch of questions. I think I would start to do some seminars where we go a little bit more in the details of how the algo thinks and how it works, and take any questions, more on a private level, because some people like to ask questions while we are live, but maybe if we have a webinar, it will be more like an ongoing conversation.
And another thing I wanted to add, a lot of getting a lot of good feedback for Severio is actually available to do the setups, which is really great because coming from a power law perspective, Severio is doing most of the initial setups. So he's
So by the way, Severio is my son.
Is your son? Yeah. So as you can imagine, he understands this very, very, very well. So you're also going to get the best engineering and the best advice from Severio, and you get to work one-on-one with him as well.
Yeah, he's very good. People have been saying very, very good things about him.
They have very good things. Yeah, we're very happy to have him with us. So, yeah, go ahead, book the call. Now's the best time. When the market's doing this, it's too late when it hits 160. Well, you've already missed out.
Then talking about questions. Sorry, guys.
There's something I wanted to discuss. That first question, if you bring it up,
sure.
Just with what Marcus. Marcus, do you want to bring
which
up
one? Which one do you want?
First, this Bitcoin Jake. Yeah, I just wanted to just talk about this question in reference to Marcus's chart, and I wanted to see what you think because, Marcus, can you bring up the liquidity map? Marcus is on mute. I think just try and unmute us all.
Yeah, can you hear me?
Yeah, we got you now. Yeah.
Giovanni likes to mute me, and I'm the quietest one in the
room. I mute everybody.
He punishes me because I had those sunflower seeds one day. So.
Do you want to bring up that chart?
It was so annoying.
Hey! Actually, I was watching your show yesterday with Stephen, Giovanni, and all I could hear was you typing.
I usually mute myself, and it's not that I am doing silly things. I'm trying to, deal with things that need to be dealt at that moment.
Yeah,
I'm sharing. I'm sharing my screen. I'm sharing it. Giovanni has to activate it. Okay, there you go.
So, okay, this question. What are your thoughts on a continued bull run that lasts longer than the typical 4 years? We're just continuing to step higher with times of consolidation in between, like we've been experiencing the last few years. Okay, so this is like a lot of the conversation that's going on right now. The cycles are dead, and it's going to be a long cycle. And all I want to do is just look at three things. And Marcus, you know what I'm going to get you to circle. What are the three things that we need to circle right now that take us all the way down to 70K? these liquidity pockets, 1, 2, and 3. It
right.
kind of looks like to me at 3x, which is there's quite heavy liquidity, is that we're already building inventory to bring us back down to power law support.
Right, this will be over
This
here.
level here below 70K, we know from history that we left a bit of that 3x last time because we've been tracking this since we're at 50K. And I think we left the inventory there at 50K. We're never going to go back there. But what's really interesting here, and I want to get your thoughts on this, Giovanni, is in my eyes, I'm starting to see evidence of liquidity pools being built up to the levels that say, according to the Bitcoin power law cycles that we have, is that where potentially we might end up. We all know that the power law support is like a magnet. So is this evidence that we will return one day to the power law support? That's my question. It looks to me like it could be building evidence of that.
Yeah, I mean, look, and I hear people going all over the place with this, right? So first of all, continual bull run. We don't have a bull run. So it depends on how you see Bitcoin, right? So if you see Bitcoin in the way I describe it with these modes, we are on the border between the turbulent area and the core power law. So, in theory, the power law is a perma bull run, right? We have a bull run all the time, continuously. The only time when we had a bear market was when we went down from a crazy bull market. And it was just a correction of something that was a big, huge deviation from the power law. So we had 3 years of bull run and 1 year of bear market. Now, if you're looking at what people usually associated with bull run, that was that one single crazy year when we went above the power law, we don't have that right now. So there is not an extension of anything because we don't have a bull run. So it's more like following the power law. So I don't know what people talk about extending the bull run if we don't have a bull run, a proper bull run. We will continue this other type of bull run, that is the power law bull run, that really, honestly, is what Bitcoin has done in average over all its existence. Because the result of the bull runs was that you had a bear market that canceled it out. We went all the way down to the support line every single time, and that canceled basically all the gains from the, let's call it hyper bull run or whatever you want to call it. So the total result is that for 16 years, we are in a continuous bull run, in fact, all the time, because in average, even during the bear market, we are simply recovering from, going away from the power law. So I don't know. This is my thoughts about it. I think people are talking about continual bull run because they want to create a new narrative when the narrative is just one. We are following the power law. That is the only narrative that seems supported by facts. Everything else is speculation, right? I could say, well, of course, we are going to have 8 years cycles. Based on what? It's like imagination, So I hate that kind of stuff when people propose things where they don't have really any basis to propose, because I didn't hear anybody showing any evidence that we will continue to have some kind of extreme deviation from the power law in some undetermined future, So this is what I think. That is, right now, the only thing we can do is to acknowledge that Bitcoin had these very regular cycles. This doesn't go away. It's an historical fact. And that we could have used them to predict what Bitcoin could have done this cycle if we did exactly like we did in the previous cycles. But if we don't, okay, that is gone. But today I made a post that say, listen, this mania with the bull runs, with these bubbles, it's a side quest. These are side quests, right? The main quest is staying on the power law. And that quest is stronger than ever. So that is really probably we need to switch. If this continues, we need to switch focus and not be worried or distracted by these bull runs that seem to have attracted so much attention. Because some model, like for example, S2F, S2F, it's all about these jumps, right? That happen all of a sudden. It's not about a continuous growth. That is one of the biggest difference with the power law model. And that model is gone. It's trash because it was all focused on having these huge big jumps after the halving. That doesn't, it never happened, and it's not going to happen in the future. So let's focus on the real message, which is we have this very long term trajectory that is a real pattern. It continues to exist. Hopefully, it will continue to exist for the next 20 years. And then we can do things, the things actually we wanted to do with the bull run, like, I don't know, maybe selling at the top and rebuying at the bottom, in this situation where we simply fluctuate around the power law. That is even better. Now, about the question of going down to the support line, I think it remains a point of reference because that's a physical thing, has to do with the cost of production of Bitcoin. So that stays there. And that is actually good news for the miners because they have a little bit of leeway. They don't have to go all the way to this bottom line. And it can still be used by algorithms like ours as kind of like ultra safe point of reference, because if you continue to move along the power law, that place became even safer than before, and it can be still used. Now after several years, I don't know how many years we will need to have to be kind of more sure that we are continuing along the power law. Maybe we can say, look, it's so safe that maybe we should not use it, or maybe we should go kind of in between from where we are right now and the floor. Maybe we can be a little bit more aggressive, but I'm not sure when I will want to do that decision. I'd rather use it as a point of reference, as something that has never been violated in the past, so probably even more is not going to be violated in the future if we stay along the power law. So this is it. I think it will be a great scenario, to be honest, because the bull run are exciting, but maybe it's all, we have to be over this teenage phase of being Bitcoiners, right? We're going to be a little bit more mature Bitcoiners. And so if we continue to do this, some people find it boring. I don't. It's still exciting because the price goes up and down. Maybe not as much as before, but we still have local laws, localized. There is action. You can still follow it. So this is what I think about all this. What you guys? Do you have anything to add, please?
Well, I think that it's just we're looking at the sort of writing on the wall with the liquidity. It does look like they're going to get to at least 140 to 160, and it looks like there's evidence that we could go down to 90, 80, 70. I just think that's interesting to look at, and that's the potential opportunity there. If anyone's looking to rotate capital, definitely might not be as aggressive as last time though. I think that's the thing. I think for me, it's the deviation from the power law trend which is the 200K, right? So that's extrapolated from 3 data points. Maybe that's what's going to be weaker than previous cycles. But I think I think there's a super chance we're going to get to 140 to 160 at least and fall back down. But that's my subjective interpretation. Marcus, what do you think?
Yeah, I concur. I think we just need to stay the course and let the bull market play out. I like the price action that it has right now. This consolidation and expansion is just so. I don't understand how people can seek all of this extreme fast moves up. It doesn't allow you to take any positions. So
Correct.
this chop just allows you to really load up and maximize your profitability. So much better than if you just had one rip and it's over. And just like Giovanni says, if the thing deviates too far, too fast, then we got to come back and correct. And we don't want to do that. I'd rather just keep it going up.
Yeah, one of the things that Minotaur does is it gives you a compounding machine. And this is one thing that Giovanni's been diving into. And that's even being even more conservative with the returns you can get out of Minotaur. Because if you can compound those returns on top of the returns of Bitcoin, the compounding effect is so powerful. And then you need to understand the next thing is that you want that to stretch as long as possible. Because if we go to $1 million next week, the opportunity is over. It's game over. Like you're not gonna have the opportunity that you have right now. Now, Giovanni always says this: you're not going to be able to retire on zero point 0.1 Bitcoin. It's not going to happen. So you need to find additional tools. Minotaur is just one of those tools. Right? You could do lots of other stuff, but this is our tool of how we can help increase our positions and compound our returns over the next 10 to 20 year time frame. But like Marcus said, we want things to take as long as possible. We want the market to go up and down. Like if there's going to be a bull run, we want a really strong bull run. And if there's going to be a bear market, we want to have a really strong bear market, because that's going to create the opportunity that we need. And we can sleep well at night because we have the power law as our roadmap. If you're relying on hodling to get you to your financial goals, then of course all you're going to want to do is make the price go up as fast as possible, as quick as possible. But it is short-sighted, because there's a lot more that you can do if you play your cards right. So that's what we do at Minotaur. We built a tool that helps you achieve that. If that's what you
Accumulate.
want to
That's
do.
why we call it the accumulator. That's what it
It's
does.
called the accumulator. Yeah.
Nice.
Accumulates. All right. What else? There's more questions
Okay.
here. Yeah.
So this question about some convergence. I mean, yes, there are other ways of calculating these things. Like in the show with Steven, we talk about the log periodic power law, and there is some evidence that these oscillations are there. We see them. We can fit them. They seem to be accelerating. They go faster and faster. That is a sign that there is something happening, because they cannot be, at a certain point, they are so fast they cannot be sustained. And there is one of these models says that sometime in February there will be some big correction. Now, is this the top? That means that we pushed it a little bit farther than the end of the year. We don't know. Basically, we are in a new regime where we need more data, because things are different from the past. We need to collect more data to see what is different now, right? So all these things help. Maybe it's better to focus on what is happening locally than trying to predict things beside the power law. The power law remains, is the backbone, right? So we're talking about deviations from the power law. Oh yeah, that is a good observation. There is this question for you, Marcos.
All right. Why the price won't go down to 90K to harvest the liquidity lower first before going up? And this is Will J. Good question, Will. That would seem like an obvious potential possibility, but the reason it doesn't do that is very simple. The market typically doesn't go in two directions at the same time, and it makes sense. If you were running a store and you bought a bunch of wholesale inventory, you're going to want to mark that inventory up and sell it off before you buy more inventory. You don't buy inventory wholesale, then go back to the wholesale distributor and buy more wholesale inventory. You have to, there's this cycle, right? So in the markets, it's no different. It's just business 101. So when the market makers accumulate inventory. And another thing to be very, very clear, these institutions don't they trade on long-term time frames. They don't look at the market on a 5 minute, 15-minute charts.
Yeah,
They're on long time frames. So when they accumulate over large periods of time. And when they go in one direction to mark that accumulation up and distribute it, they take equal amount of time. So they don't go back and forth. So to answer your question, right now they're in a distribution model phase, and they're distributing inventory right now, not accumulating it. So they don't do two things at once. So as long as when in doubt, we zoom out, and when we see that they're distributing, then we're pretty safe on the other side. So they're not really going for the 90K. And just like Costa said earlier, this is why the markets are so efficient. These models are very, very precise. They're already building the return liquidity down to 90K and 100K. That's already being put in place now to come back to later. So they're going to have a pathway later to come to 90K and 100K. So it's pretty cool.
Makes sense.
Hmm.
So this question, maybe Costa, both of you guys.
Yeah, well, maybe Marcus can cover that. But we actually make more money during the drawdowns, but Marcus
Yeah.
can tell you why.
Yeah. I'm gonna go back to that same simple analogy. It's just business 101. The whole game is buying inventory. You have to have inventory. If you're going to run a business, you need inventory. So when prices go down, that's a good thing. When there's a bear market, everybody gets scared of the bear market. The bear market is like going to the flea market or to the wholesaler, the liquidator. It's like you're going to get the best prices of the 3 years. It's like go shopping, get your credit cards out, get your account, the money ready. So when we have drawdowns or bear markets or corrections, those are just opportunities to pick up inventory, sometimes at deep discounts, not just wholesale, just like fire sale. So you want to be ready when those happen. And that's when we make our most money because our algorithm is designed to perform extremely efficiently in flash crashes or in periods where fear is too strong, too great. And those prices are just super, super cheap because weak hands or people that don't have strong mentalities tend to dump at the wrong time. And the smart money is there to be on the other side and say, okay, you want to sell it, you want to get rid of it, you want to dump it. Yeah, I'll take it. And that's we do good when the markets are going down. We love it. Can't wait to make more money.
And this question is more related, I think, to maybe borrowing.
No, yeah, this is a through some. Yeah, mostly after the drop. It's up to you. So the algorithm is going to be calibrated to really protect you all the way down to the power law support without a rally. If there's rallies, we're going to be able to walk the price down. So the bot's going to be engineered based on your capital size to survive the bear market environment. So your monthly returns, you can withdraw them every month and realize them absolutely. If you left them in there, you would be able to you'd have savings for later in order to buy back in at the bottom if you want to, or also give yourself more of a liquidation buffer if you're riding it really tight. But the intention is always to be able to realize and draw if you need to.
Okay, maybe we could take this last question.
Yeah, that's the same question answered.
Yeah.
You don't need to wait until the end of the bear market in order to realize the supplemental income. You can do that anytime.
Yeah. So the algorithm is very much neutral, from a point of view of what happens with the cycles, because first of all, this will not be even with this will be a mute case, right? If it is if there are no bear market anymore, but even if it was a bear market, actually, like we already pointed out, because the algorithm is trying to basically DCA down your position, it's almost ideal. It's actually even better because all what you need, remember, like Costa show in the diagram, it's a time when there is a little bit of a recovery because we are not exactly all the time out. Our average buying price is not exactly the bottom, the current bottom, but as the price corrects, we are coming closer and closer to it. So anything that brings you above that average buy that you did, it will be a profit for you. So, and that happens all the time because we never go down in a straight line, right? We go down, there is a correction, then we go down again. So it's really the algorithm is focused on these relatively shorter periods. It doesn't care about if we are going up or down globally, So it's really an amazing tool, So it works in all season. And some people ask me in a similar context if we could do shorting, but yes, the algorithm can do shorting, but it's not really worth it, because if a market reverse, in particular if you are not like a sustained bear market, then you will be in a difficult position. And it's not necessary because this logic that we just described works in any type of market. So it's really great that you have like one consistent tool that works all the time.
just to add to what you're saying, Giovanni, if you just follow the power law, you'll make more money going with the trend than trying to pick up faded and make smaller amounts of money going against it. It's so easy to make it with the trend than with against it.
Yeah. Okay, guys. I think we keep it very efficient this time. We cover a lot of topics, and we will be here next week. Thank you, everybody.